What's up, everybody? This is Steve from AltCoin Buzz. We're going to break down and give you some advice today on tips for your trading tool bag. So these are some of my personal bits of advice, my tips, and some tricks on how to help you trade cryptocurrencies. Now, we're not going to break down and go into how to actually purchase the cryptocurrencies and put them in your wallet and stuff like that. You should already be at that point by now if you're looking at making investments and movements on your investment. So what we are going to break down are things that I do and what my background is in terms of investing prior to getting involved in cryptocurrencies. If this is your first time listening, go ahead and subscribe. Hit that bell next to the subscribe button so that way you can get more news and notifications from AltCoin Buzz on a daily basis as we make more videos. So all right, let's get started. And be sure to tell your friends you heard this on AltCoin Buzz. Don't keep it a secret. Let them know where you're getting your information. We're all here to help each other. So first and foremost, let's lay some ground rules. As always, don't invest more than you can afford to lose. That's the best investment strategy you can have. If you can't afford to lose it, you should be saving it. Point blank. I also personally don't recommend going into debt to make investments. I know some people are big on SALT, or they're big on, taking out a loan or what have you. To me, it's personally just not wise. You're already risking something that you can't afford to lose at that point in reality. Again, this is not specific investment advice. This is just two dudes sharing some information. I'm telling you what works for me. It may or may not work for you. Of course, you have to, apply it. Just like if I handed you a high-end guitar and you'd never played one before, but you've seen me play it and you've heard some songs on the radio, you're going to jump in and then all of a sudden you're going to know some ballads and bust out some Led Zeppelin. It's not going to work that way, right? So you're going to have to take some of these tools and some of these tricks back and start to practice them. Practice them small. See if you can get yourself successful. It really boils down to honing in on a behavior, identifying some of your highs and lows and your emotions, so that way you can break yourself free of some of those irrational thoughts that you have. And then by starting small, you can prove to yourself. If you can't make $5 turn into $10, for example, you're not going to make 1,000 turn into 10,000. It's just not going to work. You can either double your money or you can lose it and throw it all away, and we're certainly not here to do that. So don't get emotional. Don't become irrational. Always try to think from a logical standpoint, and check yourself from time to time. Kind of like pinch yourself and ask yourself, am I just getting excited? Am I buying into the hype? What's the reason for me doing this? So you're going to have to be able to accept the responsibility for what you do, because you're accountable for yourself. Nobody else other than your family is going to really care whether you succeed or whether you don't, but we're all here to kind of, jump in and drop comments and make each other aware of things and trends that we may not all be able to see. As you can tell here on CoinMarketCap, there are 1,334 cryptocurrencies. They're not all going to be winners. Fact. They're just not all going to be winners. There's the sea of green from time to time, and we're all living this high, getting this hype going, but some of these are fakes. Some of them are illegitimate projects. They're going to fail. They're businesses, right? And what's the rule? That X amount of businesses fail within the first so many years. Well, some of them are doomed from the get-go. And some of these cryptocurrencies are just flat out, they're crap, right? We know there's junk coins out there. So just be aware. Don't buy it just because it's cheap. Don't buy it because it's on the uptrend. And real talk here, guys. You're going to lose money sometimes. So you can't always pick winners. No one here is going to be batting 1,000, right? The idea is you want to be batting at least 500. If you're not batting 500, you're not breaking even. So you want to be batting above that. You want to be swinging with the Mark McGuires and the Sammy Sosas. You want to be Derek Jeter. I'm assuming he was good at batting. I stopped watching baseball, actually, right around the time that the strike happened in, 94, 95, and I was a big Atlanta Braves fan back then and just couldn't get back into baseball after that. Sold off my baseball cards, stick them in the spoke of the bike wheel and stuff like that. So, all right. Now, Jeff always gives you guys advice buying the dip, right? So, always buy low, always sell high. We're still going over the ground rules here. Obviously, you're going to ask, well, yeah, but how do I do that? It's easier said than done, that's for sure. So hopefully we'll show you that. And then here's another one. Two terms that are going to make you do some dumb stuff. FOMO and FUD. FOMO is fear of missing out. That's all the hype that goes into ICOs, all the pump and dumps, things like that. You're going to ride the hype train. Avoid FOMO. Again, just goes back to checking yourself. Are you making a smart decision, or are you just jumping in on the hype? And then FUD these are things you're going to hear on the mainstream news. You're going to hear it from your friends and colleagues that don't understand cryptocurrencies and tell you how everything's a scam, how the market's going to crash, how regulations coming. Some of that, you pay attention to those regulations. Right now we're in an unregulated market, but some of that stuff's going to become legitimate, and you don't want to get caught up in be holding on to something if it's going to get de-indexed from a market, something like that. So let's dive into some other things about misconception. So market cap. First and foremost, I think I hear a lot of people talk about market cap and they seem to understand how it's calculated, I think. But the basics of it is that it's the current selling price. So like in Bitcoin, for example, it just dropped down to 15,919. And there's so many coins in circulating supply, 16 million and some change. You multiply those two things together and you get market cap. That's how we end up at $266 billion. Now, I think a lot of people that are newer to investing, whether it be stocks or cryptocurrencies, tend to believe that there's actually a value there, that some people have put $266 billion into Bitcoin. Now, that didn't happen. $266 billion didn't get invested into Bitcoin. So how, you say, right? Well, it's calculated off of the current demand. So some of these people bought into Bitcoin when it was $50, $300, $5,000, and they're still holding. But nobody had to pay the deficit that made up the difference between what they paid and what the current value is. So it's actually only worth whatever the current selling price is at any given time. There is not literally $266 billion dumped into Bitcoin at this time. There's no reserve, right? Just like there isn't on cash. But, a good portion of that probably actually was what was spent, since the majority of the coin's value has greatly gone up in the last few weeks, right? It's gone up dramatically. So that market cap, don't get into the misconception that on stocks or even on cryptocurrencies that somehow the market cap represents all the dollars dumped into it. It's not a total. It's not a running total. It's a calculation. All right. Two other things. You don't win unless you buy. So sitting on the sidelines, not making investments, waiting to the last minute or getting in too late, you can't win if you don't buy. Just being part of the team, and not participating isn't going to get you anything. But you also don't lose unless you sell. So, you could buy at 10 cents, it can drop to 7 cents, and you think, oh gosh, I've lost 3 cents per coin there, I'm down 30%. You're not down anything unless you actually sell the coin. If you sell it when it's low, 100% guarantee you just lost. But if you wait and you sell it when it's up, now you have to believe, is it going to go up? That's where you check yourself, become irrational. You don't want to, sometimes you want to cut your losses and prevent yourself from losing the whole amount, and you'll take the 30% loss. Other times you'll wait it out. Sometimes it's just an accumulation period. You want to be stocking up during the lows, so it pulls back 30 cents. If you still believe in it, instead of selling, double down, put some more money into it, increase your position, get some leverage. That way, when it goes back to 10 cents, let's say you bought 100 units at 10 cents, then you bought 100 units at 7 cents. What you've actually done is you've cut your average cost per coin down to, quick math here, something like 8.5 cents. So now if it comes back up to, a shaky market and it's at 11 and it drops back to 9, you can sell at 9 for a profit now, even though you bought some at 10, because your average cost per coin is 8.5. You can make a half-cent profit per coin there. So keep track of that. And cryptocurrency is a little bit hard to keep track of in that sense, because a lot of these markets are indexed versus Bitcoin as opposed to US dollars. And they definitely don't seem to keep running total on what you bought in at. So you're going to have to keep a side ledger. So that's a side note. Keep an Excel spreadsheet of all of your purchases what that purchase was worth in US dollars and what that purchase was worth in Bitcoin or Ethereum or whatever your trading medium is at that time that you did it. All right. So another thing to look at, let's go into compare Ethereum, because I want to compare that to Bitcoin and show you something. We're here on CoinMarketCap, which is a really good place to get some information. It's got links to just about everything. It tracks probably most of the major cryptocurrencies out there. It even tracks some of the bad ones. So, and you're going to see multiple lines here. So let's make quick sense of this. This is the US dollar or Bitcoin comparison. And the rationality here is, should you have just bought Bitcoin instead of an altcoin, or should you have bought that altcoin? So you have the gold line is how much your coin is worth in relation to Bitcoin. The green line is how much your coin is worth in relation to US dollars. So since you can't spend Bitcoin in most places, US dollars is most important to most people. And if you looked at that, Ethereum has done pretty well. Ethereum's coming up here, and it's made itself a nice steady place in the mid 400s range in a short period of time since the beginning of this year. But when you take a look at that and compare that to sometime around the middle of June, ever since then, despite the fact that Ethereum has gone up in value for the most part according to US dollar, it's declined greatly in comparison to Bitcoin. So you would have actually been better off investing in Bitcoin. So look at that strategy when you're looking at a coin that you're considering getting into. What this could also mean for some people is that if you're holding Bitcoin and not US dollars, you want to be trading on that gold line. So right now could be a really good buying opportunity on Ethereum to get out of Bitcoin, or it may not, right? Bitcoin could shoot to the moon. It could be that McAfee $1 million coin that he's predicted by 2020, in which case nobody's really predicting that Ethereum shoots that high, by comparison. So make your own judgment call there, but I wanted to point out, just because it's up by US dollars doesn't mean that it's necessarily the best investment. You want to be comparing that to Bitcoin, since that's kind of the gold standard and the gold line in this case. So my background in investment was in day trading stocks, mostly penny stocks. So this cryptocurrency market is prime for me when it comes to like just fitting with my niche. But there's quite a few differences between cryptocurrencies and stocks. The first of which is cryptocurrencies aren't regulated, so there's currently no SEC or any other regulating agency that lays down a guideline or set of rules or punishments or penalties for people who have certain behaviors. Now there are, blatant laws, don't steal things from people, but the fact that it's unregulated means that I can sell my coins to you and you can sell them back to me, and we can sit here and manipulate the market back and forth. So if we're big whales and we hold a lot of coins, we can sell back and forth to each other. And that will be recorded there in the smart contracts on the blockchain, but most people aren't going to be able to read into that. But the SEC would normally prevent that from happening. Also insider trading. Although you don't hear a lot of news about people catching wind and getting inside information from their buddy who's the CEO, at one of these startups, what you will see is that they can, and there's no rules against that. It might be kind of unethical from the sense of we think we're trying to play fair like the stock market, but really the gloves are off, and this is a bare knuckle fight in the investment space, and you better be prepared to pull the leg off of a bar stool and break a bottle and get into the nitty gritty if you want to be involved with it. Or, just casually sip your beer on the sidelines and scoot out with your girlfriend, while the fight breaks out, whatever your strategy is. Now, there's also market hours to consider. The stock exchange is closed on holidays. It's open Monday through Friday. They're only open for a certain number of hours. The cryptocurrency exchanges are 24 hours, 7 days a week, and they don't care about Christmas. So you have to consider that when you go to sleep at night. In the stock market, that's okay. You can sleep and nothing's going to happen to you. Nothing is going to happen until the market opens. This market can crash on you. It can boom on you all while you're sleeping. Bitcoin could hit $100,000 while you're sawing logs and pulling Z's and counting sheep. But by the time you wake up, it could be back to $10,000. Someone could have made a fortune and you could have lost your butt there. So just keep that in mind. Stock market has a closed operating hours, and then this is 24/7. The stock market also has what's called after hours trading and pre-market trading and stuff that you have to be a kind of a special person to partake in. So it is kind of nice though on the flip side that there's no closed hours of operation for anybody to participate in the cryptocurrency space. It keeps that a level playing field, all things being equal. Now, unlike stocks, cryptocurrencies can be traded for each other on the exchanges in most cases, or at least for Bitcoin, Litecoin, and Ethereum. So normally when you go sell a stock, you have to sell your stock certificate through your broker, and you convert that back into US dollars, of which you wait for it to clear. That sucks sometimes, unless they're going to give you an advance on that, and then you have to reinvest that. With tokens, I can do a token-to-token exchange that'll complete at the time the smart contract's been verified, and I can jump from Electroneum to Bitcoin, from Bitcoin back into Siacoin over into Ethereum, and then Ethereum I can purchase Bitcoin Gold, and then Bitcoin Gold I can buy Litecoin, and Litecoin I can buy Dogcoin. Don't do that. So on and so forth. You can jump from some to the other, and that's part of why Ethereum, Bitcoin Gold, Litecoin, and Bitcoin hold such high value, because they're the intersection. It's where you have to go from coin to coin in most cases. And it's also where you have to go from coin to fiat currency. So you see a lot of activity on Bitcoin because it's the entry point, the exit point, and the medium in between trading tokens. So just, kind of keep that in mind. On a stock exchange, the moment that you sell your position, if you made money, you're going to be adding that to your taxable income. If you lose money, then you hope you're going to be able to count that against your taxable income. So let's say you make money on stocks and then you cash out and then you make an investment, but you hold it. Well, you're going to pay taxes on what you gained, whether you're holding on to a losing position that you haven't sold yet. On cryptocurrencies, in most cases, sometimes you're not taxed. Depends on where you live and whether you're doing everything on the up and up. But otherwise, you're only going to be taxed when you convert to fiat currency. So you can exchange coin to coin, coin to coin, coin to coin, so on and so forth ad nauseum. And you're not going to be able to see a taxable income at this point, at least. And that's why the IRS and some of these other agencies are highly interested in finding out the activity of these cryptocurrencies, because they think that people, especially as more things are being able to be purchased with Bitcoin and altcoins, they think that people are going to circumvent the taxation system, which is certainly possible. And probably the reason why some countries don't allow you on certain exchanges and things like that. So that's the ground rules, the misconceptions, and then how coins are different than stocks. So we only have a little bit of time, of which I want to dive into some of the strategy. So let's assume that you have $100 to invest. It's a very nominal amount. You're not going to get rich with it, but it gives you a nice round number. So what you want to try to do every single time is buy when it's low, buy on the downturn, as I call it. Jeff and other people will say buy in the dip. Never buy at the all-time high. Sometimes you'll believe that it's still going to skyrocket from there, but if the coin has literally never been at that value again, don't buy it. That's a little bit different than a coin returning to its previous high, of which it's probably going to make a bull run in some cases. But if it's in uncharted territory and it's at an all-time high, be aware, don't buy it. People are going to sell off for profit, and the coin's going to correct. And then it might rebound in some cases, as we've seen with Bitcoin, rebound very quickly. But expect that correction if it's just now getting into all-time highs. You want to watch the trends. You want to find out, what was the resistance at the high level, what was the resistance at the low level for a coin. And what I mean by resistance, if we want to take a look, let's take a look at Ethereum here, since we have this pulled up. Maybe by 1 month we'll be able to get a good sense of this. Let's go 3 months. That's still not really illustrating it, because Ethereum's been kind of dull at these points. But so what we want to see for resistance on the low point is that, there we go. The low end resistance, if you want to take like a ruler and rule that out, the low end resistance for Ethereum seems to be around the $300 mark. That's about the bottom average here on the green. Now the upper end resistance we see is somewhere around the $480 mark. So we know that at the top end of $480 is right about where it's uncomfortable achieving that. The sell-off gets strong at that point. Now at the bottom level around $300, it may not settle back down to there. But if we saw it start to dip again for some reason, we would know that if it hit the $300 mark or thereabouts, that'd be very safe, should be very safe to invest, bar any other news or any other anything out there. So check your news, check social media, make sure you're aware of anything that's going on. Don't just buy something plummeting out of the blue. But if it gets anywhere close to $300, if we're lucky to do that again, that's a strong accumulation period. Let's look at a shorter trend of the last month. So we'll take this flat zone that's over here and we'll kind of spread that out, and you'll be able to see some more highs and lows. All right, so let's look in particular at this area here from late November until now. And despite the fact that it's been a very boring currency for the most part, and it's lost some footing and it's had some challenges, we'll see that when it was at its high point, it probably was smart to decide to sell that because it had never been that high before. But then when it started to pull back, this is getting from shoulder to shoulder, it would have been a good time to buy any time that it had dipped before its comfort zone. So, I might have honestly predicted that it might have gone lower and I might have missed that opportunity to buy. And that's okay because there's over 1,300 different coins that I could purchase into at any given time, and I'll move on. I'm not emotionally attached to any of these things. And then once it got up here again and it started to get close to the resistance on the upper end, you should have predicted that there was going to be a sell-off or devaluation. So that certainly happened, and we may have just seen the lower end resistance again with Ethereum, and it might be on an uptrend, but it's a little bit early to tell. But either way, it's probably a relatively safe investment. Just keep in mind again that in relation to Bitcoin, currently it's tanking in value. So there lies again an issue. If you're buying it with USD, it's relatively flat. If you're buying it with Bitcoin, it's tanked. So Bitcoin and Ethereum could be a good buy. We'll leave that up to you. And what you want to do is not get too emotionally attached to these coins. There's not going to be anything wrong if you decide to buy it and then it just skyrockets out of the blue, and 5 hours later you're willing to sell it for a 30, 40, 70% profit. Don't think that it's wrong to sell it for a profit. That's the whole reason of getting into it. And don't regret if you sell it and you made 30% profit per se, and you turned your $100 into $130, and then 2 days later it's $170 and you don't feel like you could buy back into it, and you could have, woulda, shoulda, could have had $170, but pat yourself on the back for that $30 that you made, and be thankful that you're batting in the black there, and that you're not in the red. So any day you can bring home some bacon with it is a good day. So don't regret selling for gains. That's one of the biggest things. A lot of people are like, oh man, I sold my Bitcoin way back when and should have held on to it. I'm like, well, did you make money with it? Yeah. Okay, well, it suited you at that time, right? We can't predict the future. So, it could all be worth zero someday. That's that bubble they're all saying that is potential. But, given the fact that the adoption of these currencies is just starting to happen, it's probably not going to burst a bubble at any point. So don't get attached. Stay on top of the news. Buy in the lows. Don't regret selling for gains. And then also don't panic sell. Panic selling is different than smart selling. Smart selling is when you sell for a profit, or you're selling because you have credible news that what you are holding on to is going to lose a considerable amount and not recover from it in a short period of time, or in a reasonable period of time, or ever. So smart selling is making a non-emotional decision to part with your coin either for gain or loss. What you'll see is a lot of people, when coins hit their high, they're selling for profit, and it'll cause, Bitcoin is at 17,000 and some change today. Now it's dropped down to below 16,000. It doesn't mean the basement's, it's going to fall out on it. It just means that a lot of people are taking that, cashing it either into altcoins because they're seeing a resurgence in the value of altcoins, of which we know most of them have greatly devalued in comparison to Bitcoin, or they're cashing out to fiat currencies. And you can go and research some of this and find out what markets are contributing and whether Bitcoin's getting converted into yen and US dollars, or whether US dollars and Ethereum and all that are getting converted into Bitcoin. So now let's do a couple other things. Here's another thing that I look up when I'm on CoinMarketCap. And I like this site because it's got a lot of handy information. I don't have to go and piece together a lot of stuff from different places. So up here in this trending area, we want to go here And you want to be aware because there was like 1,326 currencies just the other day, and now there's quite a few more. So now there's 1,334. If we go here, we can sort by newest, and we can find out what new currencies have come on the market and start doing some research on those. Because if there's any indication of when to buy something, sometimes it's right after it's come onto the market, because it's sometimes at its lowest price. But we have seen coins hit the market and then just fall off the face of the earth. So it's not necessarily a good idea to just go in and buy the newest coins, but there are a lot of investors that do that, and that's why you'll see brand new coins shoot up 100% one day and then drop 80% the next day. They just pump and dump these coins because they can leverage their amount of money against a really low market cap. All right, spam. Thank you. All right, that was fun. And then also to sort, so you go to trending, and when it's not pulling up spam from this stupid masterclass, oh, wow, that's fantastic. You're tricking me into clicking on an ad. So beware of that. The cryptocurrency space is certainly full of a lot of tricksters and scammers, fake mining operations, all sorts of stuff. So, just, get your consensus from your friends. Research it on credible sources like AltCoin Buzz and Data Dash and some of our other YouTubers that are out here. But let's come in and sort. And if we want to say, hey, let's buy something that's on the low, we want to find out what's on the 7-day low. And you can come in and you can sort a lot of these by their gains and their losses, find the top gainers, find the top losers. And you want to be looking for something that's red, ideally, especially 7-day red. And you want to be trying to buy it at its low. One of the earlier indications that maybe it's starting to rebound is when you have a 24-hour red, a 7-day red, but you've got a 1-hour green. That could be an indication that, okay, maybe I should be buying this one because it just might have hit the trigger and it's starting to go back up. It might not, but those are some of the ideas of what you can do. And in my opinion, what you can do is you can sell from one coin to the other, hold one coin, and what you want to try to do is just continually move yourself up, selling from one up position into a low position where possible. You don't want to be selling from an up position into another up position, or holding into one currency for any too long of a period of time, unless your strategy is to do what's called hodling, hold on for dear life, and buy that coin and then ride till you die and cash it out 10 years later, like pulling an old Leonardo da Vinci painting out of a family vault 400 years after the fact and putting it on the market. The company may or may not be there. Hopefully you're still watching your investments. Some people just have that hope that, if they were the guy that bought that $50 Bitcoin and they stocked up and bought 1,000 of them, that, if they forgot about it and left it alone, by the time it was worth $5,000, that they were going to become this mega rich, millionaire, billionaire type of scenario. But, just try to make smart investments, play small until you get comfortable. And then here's another thing you could do too. Let's say you put in $100 and you go and you flip that and you get into like an ICO or something like that and you turn it into $500. Do yourself a favor and take that first $100 back out. That way you're just playing with the market's money. Get your $100 out, but you shouldn't really have to if you're not investing stuff you can't afford to lose. But it does feel good to know that you no longer have any more of your chips on the table and that you're playing with what I'd call house money. But anyways, if you've got questions on what to do, go ahead and comment those. We'll try to get around to answering you guys. There's certainly a good community among the 20,000 of us, ching following. A lot of people answer your questions for you. Take everything with a grain of salt. Do your own research. Don't let somebody else tell you how to spend and invest your money. But definitely make sure that when you go and you're ready to click the buy or sell button, that you've done all the research you can. You've got your tool bag full of all the tools necessary and your brain packed full of knowledge, and trade smart. This is Steve from AltCoin Buzz signing off.